According to Access to Finance survey report presented by Enhancing Financial Innovation and Access, on December 13, 2023, despite challenging macroeconomic headwinds, Nigeria's formal financial inclusion improved to 64% in 2023 from 56% recorded in 2020. The growth in financial inclusion in 2023 was majorly fueled by marginal growth in the banking population and the growth in the use of non-bank financial institutions such as Fintechs, which rose to 12% in 2023 from 5% in 2020, while financial exclusion persisted due to the high level of poverty and difficulty in accessing financial service providers in remote areas. Also, little and irregular income has become a prominent barrier, surging from 31% in 2020 to 49% in 2023, indicating a heightened awareness of income-related challenges, while the ongoing relevance of fiscal access to financial institutions persists. The use of mobile phones increased to 93%, that is 103 million in 2023 from 90% in 2020. With a 4 percentage point and 1 percentage point decrease in the usage of flat phones and feature phones. At least 1 in 2 reported access to basic phones for the priority excluded groups. Nigeria's financial inclusion landscape transformed significantly from 2016 to 2023, with formal financial service usage growing from 30% to 57%. The adoption of financial service agent has also grown from 4.4% in 2018 to 54% in 2023. However, is financial inclusion accessible, sustainable, secure, and efficient for individuals, groups, society, and businesses? And can it play a critical role in poverty reduction in a densely populated country like Nigeria? Hello and welcome to WebTV Focus program, where we discuss issues that affect the Nigerian household. I am Gabriel Jude. Today's edition will focus on addressing the challenges of financial inclusion in Nigeria. And to discuss this, I have Dr. Oluwatomi Eromosele, Research Manager, Enhancing Financial Innovation and Access, also known as EFINA, in the studio. Thank you for coming on the program.
Thank you, Richard, for having me.
All right. Before we begin the conversation, I would like us to stroll down the street to get citizens' perception of financial services in Nigeria.
Great.
We'll be right back. What's your perception on the system of banking in Nigeria?
The system of banking in Nigeria is quite not fascinating as it used to be before. Formerly, there is no hidden charges in the past, but now they will charge you arbitrarily without any reason. Of reasons, most importantly, when they said alert charges, at the end of the month, they will calculate your alert charges and give you. But this time around, there are many times they will not alert you. They will say due to service of internet non-availability of service, they couldn't alert you, whereas you've been debited, you don't know. Then at the end of the month, you see you are being double charged. Central Bank have not deemed it fit to enforce, though they said they have regulation, but the enforcement is nothing to write home, because I don't think the Central Bank has hardly knock on any of the banks for violation of these charges. So we don't know what is the banking regulator, which Central Bank used to be.
My perception on the banking system of Nigeria is not too encouraging again, because of their high charges to the customers. These days, if you put money, instead of the money before to yield interest, it will rather depreciate instead of appreciating. So to me, they are charging people unnecessarily.
Any transaction you made, they will charge you. Any transaction that they send to you, they will still charge you. Sure, you understand? All those things are irrelevant. And as far as I'm concerned, this is a double charges.
Me personally, I don't use my normal banks anymore because the charges are outrageous and it just doesn't make any sense to me. The monthly fees, they call it maintenance fees, all of that charges. Because just a month I had to, they removed like 800 naira or something from my account, and I barely even used that account that month. It was just very funny to me. I don't know, doesn't make sense.
Recently, I think with the government policies, there have been a bit of some lapses, or will I say some discrepancies in the course of the charges and all that. So now you begin to have excess charges in between. You go to the bank, you do a transfer, they charge you, and at the end of the week, you still get another alert again telling you you have been debited again for another transaction, electronic transaction. What is the difference? Isn't that means of stealing? So they're also stealing from us. So with that, I think they need to look into that and stop all of these discrepancies.
Bank, they are not good. Now, colony ni mo ń kó owó sí. Àwọn bank wọ́n máa ń jáwó wá ń jàkújà ni. Gbogbo àwọn bank a máa ń kó owó sí. Wọ́n máa ń jà bá ṣe transfer wọ́n máa jáwó. Bẹ́ẹ̀ withdraw wọ́n máa jáwó, so kò dára kó owó sí bank mọ́. Colony là ń kó owó sí nísìn.
In terms of keeping money at home that our fathers practiced those days, I think it's still ideal.
The moment you have one or two something, you move to the local market and buy this something safe and be putting it. That one saves time. Nobody denies it again. So in the banking system now, if you don't have somebody over there, or more, if you like put 1 million, they will deny it.
For those people that don't bank, you won't blame them, because it's all of all these things too that make them run away from the banks. Because by the time they hear people saying it, I read some of them will even tell you, no, I don't bank with the bank because they don't have 15 naira, they don't have 100 naira that they need to pay or charge it because they are just doing small businesses. Just like I said, the SMEs, you won't blame them, because what else do you say to them that will make them? So if you make it flexible, it comes closer to them. The guys are working and work out, because even the microfinance banks are not even doing better.
If they want to own an account, especially for their business, I would recommend virtual banks. See this, our regular normal banks, they are shit. I don't like them.
No, for the banking, it's not like it's a problem. We should continue with the banking, but the government needs to do better for us. By the CBN, need to do more regulations and make sure that we pay one, not paying twice, not paying 3 times on a particular transaction. You make a transaction, you are paying as much as 2-3 times on that particular transaction. It's crazy. So the CBN need to look into their system again. But I know it's all about the government policy, trying to make money for the government and all that. But even at that too, you also need to think about the masses.
I think everybody should have a bank account. It's important for tracking your finances, saving money, accountability. Basically, that's what I think.
I just bought something now from one woman, and she doesn't even know our account number off head. You understand? So I need to transfer money to POS in order to pay the woman. So what I would just advise you is to just find a way or create a platform for people who doesn't really know how to read and write. You understand? I think with the technology currently, we should be able to create a platform for people like that in order for them to fit in, for them to be using a, banking system and all.
Of reason, I see an advert whereby they say with your Face ID, then you can hook up with a banking system. I don't know how it works. So there are various ways of swindling Nigerians of their hard-earned money, which we think the central bank should have full control over.
The lending rate now it's killing, because you don't even have the time. Well, even the cost of living now is expensive. So if you go to lend money from the bank and you have to pay and the percentage interest, how do you even meet up with paying of the interest when you are not even sure the goods you are buying, if people even patronize it at all? So the lending rate needs to be looked into, because I think in the last how many months now we've had 2-3 interest, at that time you begin to increase. So it's not helping the situation. It's not helping the masses, it's not helping the people. Especially though with SMEs, it's killing the business.
All right, Doctor. So you have heard what the people said. So could you just give us your view?
It's not shocking for me because I'm a researcher myself. I go to the field and I hear some of these things. But there are 2 things or 3 things that we can take from here. First is that there is demand. People want to manage their money. They want to use the financial system, whether formal or informal, to at least they need something to manage their financial lives. What we hear is people are not happy with traditional banks, and there's more appetite, it seems, for more innovative players coming into the space. That's a good thing because it deepens our financial system. As you've heard from them, it makes it more affordable, right? So if the banks and the traditional players want to continue to keep costs, increase charges and all of that, and then the innovative players can come and bring down costs, to us, it's good for the underserved and the rural population. But also the other bit is then how the regulator can enable the market, because it looks as it is now that the demand and the supply side are not aligning, right? So we need the regulator to help us ensure that the traditional providers, and the reason why the regulators need to come in is because the traditional providers, the banks as it were today, still serve majority of the formally included population. So if we say, let's just wait for the market to regulate itself, it might take us a while. So we need the regulators to come in and say, these charges, particularly for the low-income individuals, as you said from your report, about 50% of those who are unbanked link that the reason to income-related issues. These charges are not suitable for this market. And for a central bank that says we are champions of financial inclusion, this doesn't align with that position that they're taking.
Let me take you through central bank statement, which says that Nigeria can achieve the financial inclusion target of 80% for adults in 2026. So I want to ask, do you believe this statement?
Okay, so based on experiences in other countries that have done something similar, right? There are two pathways towards achieving this kind of huge jump, go from 64% to 80% in just, like you said, 1 year. Because, like we said, some of the things that have happened since we released that last result in 2023 makes us question whether we're still even at 64%, right? If income was a major issue. So two things that other countries have done. First is that they've leveraged cash transfer. So you look at countries like India, Bangladesh, where you have government, supporting low-income, poor communities or households. And so in transferring money to them, they ensure that that money can come through digital rails. And so for you to get and receive that government support, you need to have an account or a wallet. But that brings you automatically into the formal system. Again, remember, if somebody says, the reason why I'm not banked is because I don't have income, and then there is a free 5,000, 1,000, 10,000 coming to you, it gives you the incentive that you then need to come on board. And our government says they're hoping to reach 15 million Nigerians, right, with conditional cash transfer. That's stalled for a bit, but the question is what's delaying that? And do we have the right mechanism in place to make sure that we use the same channel to achieve that? If we can add 15 million, I think we will be close to, reaching that target if nothing has happened since then. The second thing that other countries have used to achieve this is payments, because one thing that every human being will do, or at least adults, is we must pay for things. We must buy things. So payment, in other African countries, you've seen that where the government has been able to make that easily available, digital payments, then everybody then comes on board. Because if I'm paying, I'm probably receiving my money that way as well, But in Nigeria, from what we've heard as well, with people saying they no longer want to pay, people now withholding and just wanting to use cash, and people saying they want to save, we then question whether the growth that we've seen in payments over these years, whether we're going to lose that. So there is potential, but it's about the fact that we're not sure that the current happenings are aligning to take advantage of those opportunities.
So maybe we'll come to that where you advise us how to go about that. But then let me run you through the final report, which is 2023 report that stated that financial exclusion improved from 32% in 2020 to 26% 2023. Also in 2023, 1 in 4 Nigerian adults remain financially excluded, and the rural communities are less likely to be formally excluded than urban communities. So we have 37% of rural Nigerians are financially excluded compared to 17% to urban Nigerians. So I want to ask, so within those gaps, so 2020, so that report was released 2023, so 2023 to up to date, are there improvements? What is it that has been done, or do we still have some loopholes that need to be closed?
Between 2023 and date, as you mentioned, we have a 20% rural-urban gap in financial inclusion. And the truth is, to reach the rural communities, the first thing is access. If they don't have access to whether it's the banks or the agents or a touch point, basically, there's no way they can use, financial services. In terms of what has happened between then and now, I would like to say that from a security point of view, I would say that there's been improvement. Just from my take. In terms of availability of touch points, I think in the last 2 years, some of the fintech providers that we've spoken about, OPay, MoneyPoint, have done a lot to reach those communities, particularly through merchants. So not just a single standalone agent, but really through merchants who are providing other services for FMCGs and have now been onboarded to people like MoneyPoint and just making the terminal available. So that's progress, because again, that jump that we saw in between 2020 and 2023, 70–80% of it was financial service agents. So by that I mean people who can access the formal financial system, not because they have an account, but because they're actually engaging with the agent. Remember again in Nigeria, how we look at agents as they're not branches, but like they are offshoots from a formal financial provider. So for example, an agent is providing a service for maybe an OPay or an Access Bank. So they are working, their terminal is from a formal provider that has been licensed, right? So if you are using an agent, we say you're using a formal financial service. And in 2020, that jump, you saw that agent increased from 4% in 2018 to 54%, right? Almost the same size as people who are using the banks today. So if like I said, MoneyPoint and OPay are kind of still driving that, So we hope that is still, that has continued to expand financial inclusion, or at least access in rural areas. But beyond that, there are other factors. You need infrastructure. And I'm not sure how well, we don't think that's something that we have made much progress on. In the last 1 year, one of the things we've been talking about is digital public infrastructure. Right. So talking about the identity system, if you could recall, before this administration came on board, there was the whole push for NIN. And then we had over 100 million that were probably onboarded in 3-4 years. And I know that the NIMC is currently they're planning some things, but we've not seen that kind of jump again. And lastly, if I can just stop on this, in terms of the rural bit, one of the things that we are advocating for is we already have 100 and something million people who have NIN. And even in rural areas, the ownership of NIN is quite significant. The question is, how do we ease or, fasten the transmission from NIN ownership to account? In other countries, it's just been, almost automatic, seamless, embedded, so that once you have the national ID system, financial services are integrated into that. Now we have NINs. How do we, if we do that, for example, probably over 10 million rural people will be able to just have access to a formal financial system, obviously with the needed rails, consumer protection in place. But if you ask me today about rural population, I don't think we've touched on the infrastructure, the access that is needed to reach them as well as we should have.
Okay, so I think that to follow up, Central Bank of Nigeria, recent times, so there is a statement, and we saw samples of where you see NIN embedded with your ATM card. So, but it was a statement, right? So I've not seen anything done yet. But then I think that will also help us achieve this. So, but quickly, let me take you through something very critical in the society. So one of the objectives of the financial inclusion is to help SMEs, to help businesses get access to funds, right? Easy, and if I'm wrong, you can correct me, right? So, but then we have seen that a lot of times, from the video we watch, you see that people complain about, a business, roadside business woman, market woman who just doing small thing and thinking of spending money for charges. So, but that leads us now to lending platforms. So we have seen a lot of Nigerians going and preferring to lend money from digital banking, like things like Fintechs. So I want to ask, so is this any form of financial inclusion that we are talking about here? Or is another form of, segment in the finance, really?
So it is financial inclusion, and to us, we look at that as, access to credit. And because when you have access to an account, for example, it's good, but it's not sufficient, because while an account allows you to make payments, as human beings, we need more robust services that can help us to achieve probably more broader developmental goals. For example, as a business, you want to increase your income, you want to be able to access credit, and even if it's for health, there could be financing for health, financing for education, and all of that. And for us, for MSMEs and for access to credit, it's a critical aspect of financial inclusion. And the targets, and if you know, the target for Nigeria, I think, is 40%, what we've set. So 40% the CBN has set as where we should have been in 2020. But when we looked at the strategy and where we were in 2018, I believe, we set a target for 8% by 2025, right? And when we did the survey last time, about 6% of adults were able to access formal credit. But still, all of the challenges that we talked about earlier on with payments still apply here, because for the supply side, for the banks want to lend, financial institutions want to lend, but without a robust infrastructure. So they want to know, who am I lending to? Things like, identity, things like kind of your address verification, knowing where you are, who you are, access to your other resources. What do you do? If something goes wrong with the loan, how do we get repayment?
Exactly.
So collateral, but even beyond collateral, now we have the global standing instruction, which allows banks to access, or at least put a lien on your other assets with other banks. But beyond that, it also speaks to our judiciary system and our laws, right? So it boils down to the fact that in Nigeria, we really don't have isolated problems. We have connected problems, and we need to look at it as financial inclusion will not be achieved if our broader problems are not achieved, because infrastructure, for example, is beyond the financial system. Security is beyond the financial system. Income, which is an economic issue, is beyond the financial system. We just talked about the judicial and the laws, the legal, beyond. So I think one of the things, but the government needs to look at this as a collective. How do you create an economy that works? Because we can't tackle financial inclusion if all of these issues are still.
Another side of the lending, right? So we have seen that. So a lot of people have encounter with people who go to online to lend money. So they begin to tell you, okay, I lend this money and this is how their charges is, and then sometimes they also said, when you pay back the money you lend, now it will get to a level where they just credit you. Now, so they credit you, though they are also demanding another. So the charges that you pay is going to be higher than the previous one you paid, and then within a short period of time. Another site, which is very critical, is calling and reaching out to family members, contacts. There are so many issues. So, what is the CBN regulations and policies saying about this? Are there regulations, or are they just another form of money making platforms?
Yeah, I agree with you, and we're all here when CBEX happened recently,
Exactly.
and we heard what SEC said. So as much as we have the formal system and we have licensed institutions, there are other institutions that are not licensed or are operating under licenses that are not within the purview of the CBN. So for example, some of these providers that you're talking about have like a state lending license where they've gone to a particular state and have gotten a license, but that's not within the CBN's regulation. And so these are things that, again, CBN needs to work with wider stakeholders, because these are practices that, and we hear of these things where you have people who have one person having over 20, 30 loans, just taking from one to another, and then these people start to chase their family members. I've gotten one of those messages, so right. We need to clean our financial system, because, again, and the financial system is built on trust. And one of the worries that we heard from this video is people losing trust in the system.
Right.
And when that happens, you start to worry. And one of the things we saw in 2023 was that in the Southeast, for example, people were leaving the formal financial system and going back to their village association, community groups.
And doing asusu. Somebody said it.
Yes, and doing asusu type of things, which, for them, with access, it gives them speed, they're able to pay at their terms. But those things are not robust. They can't help you grow at the scale that you need to. So, for example, from a village association group, they are limited at the scale at which they can support themselves, because there's a limit to the resources they have as a collective. But one of the things that for EFRINA we're trying to do now is to say, how do we integrate these guys with the formal institutions? And by formal, we don't necessarily mean banks. If what they are happy with are the Fintechs and the innovative guys, how do we bridge that gap so that these guys can have access to a larger pool of resources, be more integrated, have better offering, low costs, and then the Fintech can also serve them. And if the Fintech say the reason why our cost is high is because we don't know who these guys are, then as a collective, that gives them some kind of identity. And as an institution, so it's lower cost, greater value for those who are using informal. So that's one of the things that we need to do. But in terms of predatory practices, it has been on the rise. Confidentiality, yes, it has been on the rise. One of the issues that we're concerned about, and that is why when we look at the financial inclusion targets, we think that to the CBN, just setting those targets are not enough, because it really just looks at access, doesn't speak to the quality of the offerings, which is what we've just spoken to. Doesn't say, what percentage of adults are facing this kind of practices or facing credits that are beyond, rates that are excessive. So we need targets as well that go beyond 80% to say, what targets do we want to set for the quality of offerings? Then we hold the providers accountable for that.
So do we know these people? So in the financial system?
Quickly, the FCCPC has since these guys are not under the CBN, somebody has to manage what they do. So the FCCPC has a list of approved digital lenders. And I think people should go to the FCCPC website to see, if you're trying to borrow from somebody, see whether that person is on that list, because it means that that person has met the standards that has been set. And if they're not on that list, they are more likely to have predatory practices that will put you, not move your life forward, but probably put you into debt. So in terms of who manages them today is FCCPC. Anyone who is not on FCCPC is probably just someone who is yet to either have been maybe reprimanded or caught by the regulators. But there are millions of them there. And we just need to be mindful. Part of the consumer education to say not everybody who is lending is licensed. And you need to be aware of who you're borrowing from. Yeah.
That's set it right. So let's quickly talk about challenges associated with formal and informal banking services. So in your report, you said those challenges, you mentioned fraud incidents, poor services, high transaction costs, lack of clarity of information. So specifically, I want us to talk about the cost of transaction, because you heard what some people said on the street video. So charges, we have SMS charges at the end of the month. We have
Card maintenance.
account maintenance. We have the deposit charges.
You have card maintenance.
Exactly. So a lot of charges come in. So what is this thing all about? You know, it's becoming like another way of discouragement to people, you know. So what is really the problem?
So let's start by saying that we know that the banks they're here to make money. So we know that they have to cover their costs. But I think that, speaking as a Nigerian now, when we look at their reports at the end of every year and what they report as their profits, we are probably, even if we were not aware before, we know that they are making profit. So I think that has been settled. So, and that's why you see a bank like Sterling coming to say that we will put this aside, because it also shows you that really this, in terms of the impact on their bottom line,
zero transfer.
It will not be significant on their bottom line, because they will be profitable regardless. In other words, they can provide free transfers and still be profitable. And Sterling is not even one of the top tiers, right? So, and in other countries, what we've seen is no frills account, where government has said for transfers below a certain amount, because they know for somebody to be transferring 100 naira, 200 naira, it's likely to be a low-income person. And in those countries, government has said for those kind of transfers, zero cost, right? Because they want to make it more affordable. I think that's one of the things that CBN needs to think about, because we're also looking for a system that is inclusive, to say not everybody can really pay this charge, right? And there are other ways that as a regulator, we know that you're making money, but we would probably put a limit on how far you should go with this. So in terms of what the transfers are for, the new one is also a tussle between the banks and the telcos to say who gets what. And the telcos for a long time have been saying that the banks get the bigger share, they don't get to cover their costs. And again, you know that they have all of this infrastructure that they have to maintain and pay for. We understand all of that. But I think the bottom line that we're hearing from the video that we've seen and from Nigerians is that even these costs, as little as we think they are, when you look at it relative to the cost of living and the burden that people are already bearing, it becomes very significant. And we should, as a people, say, how can we lift this burden off people? And like I said, what's been done in place a limit, and as clarity as well helps. I mean, my husband doesn't need 9,000, but every time maybe at the end of the month he gets like an 8,000 debit, he comes to tell me, because he thinks you're in that space, and he comes to tell me, they've just debited 8K from my account. What is this for? And this has just been like in the last 1-2 months. And I'm like, 8K is not your problem, but the issue is he doesn't even know what it is for. So I think that the lack of clarity, the sense that, why is this happening? I mean, somebody said one of our A12 documentary that my card is in my pocket. It's not with you. Why are you charging me for card maintenance?
I'm the one that's keeping it.
So some of it needs to be done, but I think we just need to, as a system, we also need to look at this collectively and say, how do we ensure that we're not exploiting the people and making a few people more profitable, and ensure that our system is more inclusive? I think that's what we need to think about.
Let me put two things in one.
Okay.
Right. So we're talking about preference of fintech and traditional banks. So it looks like people are running into fintechs, financial institution, living. They will tell you it's very fast, it's very, all of those things. And also, so what are the issues and how do you think the fintech is deepening the financial inclusion in Nigeria? And secondly, your closing thought to how we can encourage more Nigerians to be involved in the financial services, especially in the rural areas, for the ease of doing business and also for savings.
Okay, so like I said earlier on, broadening the offerings and what people can choose from, choice, empowers the consumer. So it's good that they're going to fintechs. From the first time we did the A12 survey in 2008, every time you ask people, what do you want? Why do you choose a provider? We talk about convenience, easy to use, easy to access, speed, low cost. We talk about those things. And if the fintechs provide that, the CBN should then ensure that the system encourages that kind of innovation that can give people what they want. And we shouldn't see it as a bad thing. It is a good thing because they then put the traditional providers on their toes to say you need to reduce costs. And with time, when you see the migration, people will naturally, move in that direction. In terms of what we need to do, I would say maybe 4 things. We need regulation that does that. We need regulation that is inclusive, looks at how do we reach the last mile? How do we have institutions? Because that's what we may also be lacking in Nigeria, that we don't have institutions that have the heart and the interests of the last man at heart. So how do we have institutions that are that inclusive and think about the last mile? The second thing is that we need infrastructure, infrastructure that can reach rural. Because first thing is you have to reach them, and that's what you see with OPay, MoneyPoint, and those who are reaching them. So we need infrastructure. We need payment infrastructure that is cheap and affordable, suitable for low income, no frills accounts. We need solutions that are empowering. What people have said is, I have an account, but I don't feel like, it's rather like it's more expensive than I want it to be. People are also, from what you hear, they don't communicate the value that they think that these accounts are bringing to their lives. And that's why they're shifting. So we need value-adding solutions, whether that is credit, that is affordable and can touch, what people need. So education, health, businesses, or we need insurance that can ensure that people are resilient. So solutions that can also prepare people for the future. So pension and things like that. Then I think lastly, we need to empower our people to be able to make the right choices. So Nigerians really we need to educate them more, ensure that they are able to and capable of taking, managing their resources better in a way that can improve their livelihoods. I think if we can do those 4 things, where we have inclusive, enabling regulation, we have digital infrastructure, right, that is inclusive and reliable and affordable, and we have solutions that are driving impact for the last mile, and an empowered Nigerian who can use, not just use, but also make money and then manage their finance in a way that it improves their livelihoods. We would have a better, not just financial system, but a better Nigerian and a better, nation as a whole.
Thank you very much, Dr.
Thank you very much.
Oluwatomi Eromosele,
Thank you.
Research Manager, Enhancing Financial Innovation and Access, known as IFINA.
Thank you.
Thank you for coming on the program.
Thank you very much.
I mean, it's our first time to have a female guest.
You need more.
All right. Thank you so much. Thank you so much. Yeah. And now to you, our esteemed viewers, this is where we draw the curtain for today's conversation. If you want to get more knowledge on finance, the market, banking, the economy, and investing, please visit the ProShare website, WebTV YouTube, and follow our social media platforms displayed on the screen. Also, we will appreciate your feedback on and comments on the program. Thank you for watching. I am Gabriel, Jude, signing out, and have a great day.